Good morning, everybody. Happy Thursday. Hope you guys are doing good. We'll get started as usual in just about a minute. If you could just quickly let me know, as always, if the audio and visual is looking good for you. That'll be perfect, and then we're going to get started here in just a sec. I'm just going to quickly check one thing here. Alrighty. Making sure I can see your commentary. Good. All right. Perfect. We'll get started in just a minute. Let's see here. Where to start? I'm going to start with a quiz this morning because I just want to make sure people are understanding what's going on. So, okay, let's get started. Good morning, everybody. Serge Berger here from thesteadytrader.com. This is our Set the Market morning show here live on Thursday, the 3rd of April. Hopefully, you were able to navigate this market with us, not only just for the past couple of days, but for the past few quarters. And one thing that we have been making very, very clear about is the following. If you look at this chart here, this is our market rover. And unlike your favorite chart-chasing CNBC commentators, what you will see is that very unemotionally, the market rover algorithm told us in late February, first couple of days of March, that the technology sector is no longer in a bullish trend. How many people in here have heard me warn about Mag 7, whether it's through the market rover or for the past 9 months? How many people, type in me, M-E, if you've heard me talk about and warn you that Mag 7 is a crazy crowded trade. Not bad companies, good companies, but an unbelievably crowded trade. Who's heard me say that before? Give me a quick me, M-E, in the chat box. I'm doing the exercise because I'd like to know if anyone actually pays attention when I spill my guts like that. But also, like, if this kind of resonates, you know? Okay. So it's ridiculously important to understand this. Now, before we go and we're going to look at two very important things this morning. Our straddle on the S&P, which so far this morning is looking very good. Okay. And then we're going to look at the the bond market, which, believe it or not, there's a better, ever so good-looking chart there that that we need to be aware of. Okay, so let me just, before we look at these things and update you on the straddle and everything, and thank you all for participating. I really appreciate it in the comment in the chat box there. The implications of what you're seeing here right now are extremely important for your portfolio. Remember, I can't give advice here, so through the lens of education. If you have an S&P 500 centric portfolio, which you most likely do, like your IRA, your 401k, or if you're in a different country, you probably are way overexposed to Mag 7. Again, I repeat, these are not bad companies, but it is an unbelievably crowded trade. In fact, let me quickly find this chart that I actually sent to some colleagues over on Wall Street who were not aware of this chart, which was a bit concerning. Let me see if I can find it. I don't have it. I will show it to you guys next week on Monday, and I will post it in the Trade Ops channel a little bit later on today. I'm not seeing it right here right now, but I want to show you. It shows you very nicely the concentration of money in U.S. markets. It's incredible. Oh, it's actually here. I think I found it. I'll drop it in Trade Ops a little bit later on, so you guys will see it. We'll see it over there. So I will do that in a bit. But the point is, what's happening right now is that foreign investors, and this is important for your portfolio. Like, if you don't, I'm going to warn you right now. If you don't care that your money doesn't grow for the next 5 years, and I really mean this. I'm talking about not your trading account, your investment account, like your net worth, which if you're a US person, and most of you are, some people obviously across the world, but particularly if you're a US person, you need to now, like right now, you have got to wake up and change your damn portfolio. Again, it's not advice, it's education here, because you're way overexposed to Max 7. I'm not expecting those stocks to crash. That's not my expectation. I'm expecting them to turn into value stocks and thus not be able to continue to lift the S&P 500 because there's such huge overweights. Pension funds, I've been mentioning this to our clients and in trade ops since April of last year because I talk to these guys every week. They have been net sellers of Max 7 stocks since then, and that's now accelerating. Not because they're bad companies, but because they no longer have the growth prospects and they're crowded trades. Very, very, very crowded trades. They're going to grow these companies, but they're crowded trades, right? And so if you're, like, let's say a European investor, like let's say you're a huge billion dollars, dozens of billion dollars, hundreds of billion dollars pension fund. You're a European investor and you're in Nvidia, let's say, you're in Max 7. You're not only losing money because the stocks are no longer going higher, they're not going down, but also the currency. The dollar is under real pressure here because of some of this tariff stuff, for better or for worse. That's what's happening. So these companies are taking some of the money out. They've been doing it since April of last year. I know none of you listened to it then, and that I can't blame you because I was early, but it was the right call. But now it's accelerating. So if you are an S&P 500-centric investor, which you most likely are in your retirement accounts, in your long-term stuff, you may not be aware of it, but you are. I can just about guarantee you that. You need to wake up now. Not tomorrow, not next week after you come back from your cruise, but like now, right? I'm not trying to spread panic. That's not the point. But you are at serious risk of a flat portfolio for possibly a decade. I know that seems unreasonable, but that is what the math tells us because of Max 7's concentration. So we're going into a bull market of diversification. I know it's a word that a lot of you guys hate because it hasn't been important for 10 years, but a lot of you from a demographic perspective are at a point right now where you can't afford to have a 50% drawdown in your portfolio. A lot of people will lose half their money. That's my base case going forward, maybe 30%, right? And in best case, they're just not going to make much money because the S&P is going to go flat to maybe tiny up a little bit, maybe over the course of years. So that's important. Now, where does it leave us? Now that my rant is over, and I apologize, but I don't because I'm trying to help you. I'm seeing how slow people are to wake up to this because our favorite perma bulls on CNBC will never tell you that they've never seen a chart they don't like, right? So a bullish chart. So now where are we? So let's start with our straddle for the S&P 500. How many people took that straddle trade? First, actually, let's go with Nvidia first. Nvidia, straddle, bond market. That's the three things we're going to do. So Nvidia this morning, and all the other stocks look the same, by the way. Nvidia right now this morning is probably going to break below this little support level. Now that's a trade, that's near term. But again, my point is Nvidia's at the same point it was in May of last year, right? So if you have got to understand this. This is not because they're bad. They're not bad. They're great companies and fantastic companies actually, but they're unbelievably crowded trades. So I wrote a note this morning to our Inner Circle members. If you're Inner Circle member, you will receive this message and actually probably just received the email. Okay. So what's happening is, we've been warning about the importance of the correlation breakdown between U.S. assets, U.S. risk assets, and the dollar. And the dollar is now pretty seriously weakening. Like this is the US dollar basically year to date. Let me just make this a chart so you can see. So this is the dollar. The dollar made a huge lower high, which I've talked about here weeks ago, how we had a very important top in the dollar. And that can perpetuate the selling of Max 7 stocks. Not that they're bad companies, not that they're going to zero, none of that. But they're not going to continue to go up at the rate which you have, which means the S&P will flatline, potentially for years. Like 10 years, maybe 5 years, something like that. We'll see. So what ends up happening now is that there's a really high likelihood of all the risks here, all of this, it's a self-fulfilling unwinding of extreme U.S. asset overweights. It snowballs upon itself. And so when we then look at something like Nvidia now, even just technically, like this stock is just stuck in a range. We have got to come to these terms to understand this is, your investment, your retirement account, your long-term stuff is at serious risk of doing nothing for a long time. You've all gotten used to a 10 to 15% clip, maybe more over the past 10 years, which is not normal, by the way. And that's now over unless you start to diversify. So it's really, really important. Now, where are we in terms of the straddle? So the S&P 500 straddle, which we talked about here, we made a big deal about it on Monday morning. Then we followed up with a special session yesterday. Hopefully you were able to join us yesterday. That was a good session. And what we are now seeing this morning, the S&P 500 is down about 3.5% or whatever it's going to be. It looks like the straddle is going to do very well. So I'll have to see. We'll do it over in trade ops when the market opens in about 20 minutes. We're going to be in trade ops and we're going to go live and make sure we tell you exactly when I'm exiting the trade and taking profits and all. But right now, it looks like it's going to be about a 25% gain on this straddle. So remember, the bet was that we made on Monday. We laid it out very clearly for everyone here. Buying at the money call, buying at the money put. And it looks, again, this morning, if depending on where the market opens, and it should be about a 20 to 25% gain on that trade. So again, we'll be over in trade ops and we'll tell you exactly what I'm going to do. Remember, I can't give you advice. It's educational here, but I'm going to tell you exactly when I'm getting out today. We'll be in the chat room for that. Now, the other thing that I did, and I mentioned this yesterday as well in trade ops, it's an app, right? What I did late yesterday, I wrote, and I'm going to quickly share this with you guys so you can see it in real time. I shared the following. Let me quickly bring it up so you can see this here. So what I wrote yesterday, this is it. I wrote this yesterday in our app. So this is an app you can put on your phone or your computer, whatever you want. I wrote at 7:42 p.m. last night, Eastern time, that I just went long 2-year futures contracts. Now that, if one doesn't do futures, obviously one could just buy the SHY ETF, for example, right? But I'm of the belief that 2-year notes are going to go lower in yield. Okay, so that would be meaning let's buy some SHY. This is going to be a trade that has to be monitored. It's a positioning thing, but that's one thing that I now believe could happen. So if we now look, and by the way, if I give you an updated chart since then, so this is what I mentioned last night in our community, right there. That's the chart on the left, and on the right you can see what already yields have done. So I'm already making so far really good money, right? But I think these yields are going to go towards 3%. Next stop's going to be at 3.5%, and then maybe after that 3. Now this is dynamic, right? Because this depends on what happens to these tariffs. Are they going to stick? Are they going to be negotiated away? I don't know. What I will tell you in terms of tariffs, and again, we don't do politics. This is just about making money. What I do think is that President Trump has been talking about this tariff since the late 80s. You can go on YouTube and you can watch him talking about this. I don't think at 78 years old or however old he is right now, he's going to change his mind on that. I don't think he's going to remove tariffs. I'm sure there's room for negotiation, but he truly believes in these tariffs. I could be surprised, and then we'll adjust, but he's been talking about it since the late 80s. I just don't think that's going to change. They might negotiate, again, and I don't do politics, so don't give me your political biases here. That's not the point. I'm just telling you from what we're seeing that these tariffs are not likely going to go away, not completely. There are some people who think differently, and that's entirely possible, and I'm open-minded to that, right? But I do think that this is going to slow the economy. We talked about the senior loans market, so that's the credit market. Yesterday morning in our YouTube show here in Set the Market, yesterday morning we talked about BKLN, right? This ETF, how this is showing us that the economy is slowing, and it leads the stock market. It leads the S&P 500. So I think this could go lower, and then if that happens, then you're also going to start to see 2-year yields go lower, which they now are. So long SHY, and again, I cannot tell you how important this is and what's happening from a money flow perspective, meaning the money that is leaving Max 7. Not entirely, but it's a rebalancing act. The whole world is long Max 7 in way too many ways, and that's changed now. If you are in an S&P 500-centric portfolio, and you are, most likely, you need to change that portfolio now. Not advice. Go check with your investment advisor. If you don't have one, please come to Blue Marlin. You know where to go. But you need, that's very, very, very important. From a trading perspective, again, if you're just joining now, let's quickly just go back to our straddle. So I'm going to quickly show you what this straddle looks like right now. So the straddle that we put on very publicly here on Monday, and I'm going to quickly detach this. Give me just 1 second so I can detach this here. Here we are. Okay. So this is the straddle, that's the payoff diagram of the straddle. Okay, so you can see the visuals. And basically, the bet that we made on Monday, very publicly here, and again, we're going to walk you through, and I'll tell you when I close it in Trade Ops. So make sure you join us over there. It's on the community app. As long as the S&P moved in one direction or another, up or down, somewhat decently, we would stand to make money. Right now, again, I think it's going to be about a 25% winner. We'll see exactly how it plays out, and again, we'll close it over in Trade Ops. Are there any questions? It seems like it's kind of crickets here. I don't know if you guys are just shell-shocked or don't know what to do or don't know what to say. But if you have any questions, let's take another couple of minutes. I'm happy to stick around a few more minutes to make sure that I address any questions, any concerns, whatever you might have about anything. What I can tell you is that the economy is slowing. It's not the end of the world. That's not the call. So please don't walk away from this saying surge is doom and gloom. That's not what we're doing. The straddle's working out nicely. I think the bond market is telling us that yields are going to go lower. I'm now long the bond market on the short end. We've been long TLT now for about a month. On the long end, that's a bit of a different reason for that, but that's kind of where we are. So let me see if there are any questions or anything at all. Doesn't look like there's any questions, so you guys must be all set. So then what we'll do is this. If you're not in Trade Ops yet, do yourself a favor, go in there, sign up. It's just $97 a month. It's an absolute steal, and you get all our updates in real time, trades, investments, all the research, steadytradersecrets.com/ops. Make a small investment, and we're going to walk you through what is a very different time now. If you have been chart chasing the S&P's 5% dips for the past 10 years, and that's been your strategy, and it most likely has, you need to adjust, okay? Stanley Druckenmiller is one of the absolute best investors ever because he's very good at changing his mind. Very good, right? If you can't change your mind and adjust, you shouldn't be investing or trading. You have got to be nimble enough and open-minded enough to adjust to when markets change. So that's what we have Trade Ops for, okay? I'm just looking at questions here, 1 second. Yes, it's stagflation is what we're seeing here. I think that's what's happening, okay? There's no target for this buy. When we put this trade on very publicly on Monday, we said very clearly this is a trade to take advantage of a move in either direction, and that we will close it either late Wednesday or Thursday morning. In this case, it'll be Thursday morning because obviously the tariffs were not announced until yesterday after the close, right? Look, Thomas, margin is one thing. This is the Mag 7 are a global trade of epic proportions. And that unwinding, it's not going to take a day. It's not going to take a week or 4 months. It's already been taking almost a year. I think it's going to continue to be rebalancing of those global portfolios of pension funds. It could take another year or two, right? And that's really the concern I have for most people. Many of you listening here are probably somewhere near retirement or going into retirement or thinking about retiring at some point. And even if you're not, even if you're 30 years old, it doesn't matter one bit. You've got to get this thinking of Mag 7 is going to make me 20% a year out of your head, because every trade at some point ends. And I think those companies are, as great as they are, they're going to turn into value stocks at some point. And that's a good thing, right? That's a really good thing. Okay? Yeah. So typically, and again, we'll see you guys over in Trade Ops in about 10 minutes. So please sign up. SteadyTraderSecrets.com/ops. You're not going to regret it. It's an awesome place. You need to be somehow informed in this market, like through the lens of someone, and a process that's open-minded, right? Not political biases, because political biases don't make money, but do something that's actually adjusting to the markets. Is the straddle a good pre-earnings strategy? I don't think so, no. What we said on Monday when I made this trade public, actually I made this trade public Friday here live, so just so you guys know, and then on Monday even again, because I saw that not enough people joined. So hopefully this has been helpful for you guys. Hopefully you guys can appreciate this. I said that typically straddles are not such a great strategy, in my view, right? People will differ from that. But in this case, it made sense to me because I thought the market was underpricing the risks. Okay? So we'll see you guys over in Trade Ops in about 10 minutes. We're going to start to look at when it's time to exit the straddle. www.steadytradersecrets.com/ops. I'm going to quickly put this link into the chat box here as well, and we'll see you guys over there in just a few minutes. Where is this thing here? Okay. And if you have any questions along the way, please, again, over in Trade Ops. So hopefully this was helpful, folks. Thanks so much for being here. Hopefully the straddles worked out for you as well. And remember, very different environment here. It's going to require a different way of looking at things. And hopefully this is something that's resonating with you guys. So thanks for being here. We'll see you guys over in Trade Ops in just a few minutes. Take care.